Hey, good morning, guys. This is Simon with Trade and Perform Coaching. It is Monday morning, the 2nd of May, or April, May now. Wow, look at that. Indy 500 time. And so let's go attack step by step, shall we? And get this right. So, number one piece, let's go look at the levels. So, what I want to convey mostly, guys, is look at, if you look at the NQ profile from Friday, right? Knowing your levels matters. And I want to show. So Joyce was asking a pretty good question, which is how do we figure this part out? So see how we ran here we came into 1419 and then we rolled all the way back to the volume point of control. So this is all bonus, but that was kind of the target out of this level. Notice there's no level in between for a reason, right? So that's a big switch. When there's a bull market, you get strong responses without the level. When there's no level, you just get straight through, cut through those value areas. And by the way, just really quick, if you'd like to join the team or visit the room and ask for a 3-day pass or have any questions of me, you can email me at tradeandperform, TRADENPERFORM, at gmail.com. Okay, so I don't want to spend a lot of time on this other than to say that was pretty clear cut, and they wanted to get through the single prints. And I think we did that almost overnight. We got all the way through these single prints almost. We need to come in probably complete below 12,805 at some point, right? So, and I think we've done that this morning. Let's go look if we finish that out. There we go. We'll scoot this over, X this off. And then if we look at the overnight on NQ, it did finally get all the way through the rest of that poorly auctioned area. You can see from this morning, we opened up in Asia. You can see we just ping-ponged between these two yellow zones all night long, and then we finally came down, and that 12,805 was the last of the single prints that were down there. There were so few that I didn't mark it off, but you can see we got underneath, and they're trying to reverse and trying to trap on that 12,831 now, which is fine. I have no idea whether we are up or down. Let me make sure everyone sees the link here. So let's go look at ES really quick. Get kind of the same picture. Here's ES from overnight. Okay, so you can see we opened up in Asia. We use, basically you can use this zone and prior day's low as the zone, right? So bounce, 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 right? The ultimate target would have been, obviously we just screamed through the point of control, but they used this as a zone. Basically this whole 4134 to 4118 became a zone, is how the market interpreted it, right? That was tricky because you can see the difference where NQ didn't have the POC inside the zone, and whereas ES did, and ES got really choppy through there. You can see this zone was much cleaner. Backside tested it at 2 a.m., bounced, then we finally came down, took out prior day's low. The levels below are way down there on ES, so we'll just see how it treats it. I have no idea at this point, and I don't trust the open for obvious reasons in terms of the up or the down. So what I do want to bring up is, because we're having so much activity overnight, the overnight profile becomes important. So if you look at this and you overlap the overnight profile, like if you look from Friday, so see how on Friday, if you just stayed before you decided to trade, so I want to show you this, right? See how all this was value area? In essence, this became a little non-value area right here. This area right here, right? That's where prices were unfair from the overnight session, right? Coming into the 29th, right? So if you look at the open of the 29th, that was still considered that European session. And then you look at how it treated it. You can see that we opened up, right? They held that zone, right? Pushed back down, closed below, came up for an attempted backside test. And then look how they auctioned all the way back down until they got below unfair prices again. and reacted back up. So that unfair price concept is really important. Why? Because if you look at where we're trading right now for this morning, yes, there's a zone here, but unfair prices right now are 41.51 to 41.28.25. So if I want to short, I actually would like to short above 41.52 where there's unfair pricing all the way back to here, right? So it kind of gives you a lay of the land. What that really means is you want to get to the edges between 41.28 and 41.52. You want to try to get to those edges to trade those. You don't want to jump right in. The middle of that will save you some stops, particularly if you're trading the first half hour. Get out of that 41.52, 41.58, and you'll see that theme repeat. By the way, let me show you this really quick so you understand it. If you go back and look, and I'll show you on NQ really quick. Okay, so this was the overnight from the 26th, right? So I want to show you how it traded. This is the whole value. This is unfair prices. This is unfair prices. Now break it down to 30-minute sectors and look how it traded the next day. So see how we're trading this whole area. Now I understand we may have traded above the unfair prices and below, but if you didn't take a trade in the middle of all this, right, it avoided you getting whacked. And in addition, see, once you got above this, if you said my next area, it kind of creates don't trade in zones, right? So if I get set up in here, it's all right. So nothing's ever going to be perfect, right? Nothing's ever going to be perfect. But what it does is, particularly for this level overnight, which will, so forget the unfair or fair prices the prior day. If we look night after night, right, on the value area from the prior night. So this isn't an effort for some people to cut down losses is where this idea is coming from. So I'm going to go show one other area, right? So if I look in this area from 424 coming into 425, and I mark this off on a half-hour basis, right? See if I mark off the high and low of the value area, and I just decide to trade either below or above, I have a much better chance of finding a trade. But see if I trade inside of this, see how that whole 24-point area my spelling sucks and my typing sucks. Okay, so I'm going to show you one more example, then I'm going to do it on NQ. Because I'm not going to mark it on the charts, but I am going to note it, right? So if you look through this area here, right? Look on this day, the 20th coming into the 21st. This is the overnight value area. See that? Now watch. See how we swept straight through that value area? So the other piece of knowledge that's important there is if you get set up here, you can sweep through here. So what am I going to do today, right? First thing I'm going to do is put a no trade zone between 41.31 and 41.51 and see how that works out, right? So this AM no trade area and ES is 41.27.75 to 41.51.75 overnight value area. Right, so now I'm going to come over to my chart. Right, see this? And I have to have a new way of marking that off. So I'm going to take my chart. I'm going to mark 41.51.75 in white, dotted. White, dot, 41.51.75 to 41.27.75. Color, white, line style, dot. And I'm going to take a box and go, so I remember while I'm trading that is overnight fair pricing, which means it gets traded through really easily. Fill color, white, Hope this doesn't screw things up. It doesn't make any difference. I'm going to make this really big. Okay. Right click. Okay, now I know that I can trade easily through here, and it creates a new area where I just don't want to put a trade in because it can get easily, that value area can easily get traded through. So for my shorts, I'm either looking to get set up underneath 41.21.75 to come down here, or if I'm looking for longs, I'm looking for longs down in here. The point is I'll get more traction outside of this area than inside of this area. Okay, so now I'm going to do the same idea on NQ. Okay. So I'm going to slide that over. I know that becomes a new trade area, no trade area. I'm going to minimize this. Now I'm going to come over to NQ. I think it's this one. Nope, it's this one. And I'm going to mark off NQ, no trade location. Let's redo that. So 12.856 to 12.951, pretty much 100 points where you can get easily swept one direction or the other, right? Kind of hard to read. So what am I going to do? So this is easier. I can even just copy the chart over here on this. Right click, chart drawing properties, white line, okay. Line style, dotted. Okay, and instead of doing all that, erase, copy and move. Now what I'm going to do, that's off by a hair. And I'm going to highlight that. Now here's an interesting question I don't know the answer to. That's going to ping us between these two lower profiles, right? So we'll just have to see how that holds. But I know that area from doing my research over the weekend when I had the idea, it gets swept quite often. So I'm going to have to see how it trades inside of there. But I know if I say, hey, be careful inside that value area, there'll be fewer stops. So chart drawing properties with, oh, give me just 1 second, excuse me. Get over here. Did you get bit? Dude, let's see your face. Do not play with pit bulls, dude. Leave those dogs alone. Sorry. My Great Dane decided to try to play with the pit bulls next door. Not a good idea. Okay. Right click. There we go. Now this is chart number, I don't know, 16. So this becomes easy. I'm going to do this two ways. So I come over to my chart, hit F5, drawings, chart drawings, 10, comma, 15. There we go. Now I know in this area, right, we generally will get easily swept. So I want to make sure, particularly above 12.880, I'm not short till I get up to 12.951 at least, right? So, and then I'm going to do one other thing to remind myself. since this is new. Okay. Okay. Minimize. 5. Chart drawings. 16. Now I know where the value area is in there, right? So I definitely want to be careful about taking shorts inside that overnight value area, right? So now you know those levels. Does that make sense to everybody? It'll just be slippery in there, and I want to be careful I don't get stopped. Additionally, right, while I'm covering this, I'm going to show this morning because could have been really frustrating, and why I don't trade after 7 o'clock. If you thought we were going to go lower after 7 o'clock, like you didn't see this turn, this is stop after stop all the way through here, and then same with the longs. See this? When it's going one bar positive, one bar negative. So on the 20, it was tradable, but on the 24, with the narrow range that it was in, it was a lot of, you had to be very, very fast to make it work, right? So I'm going to give you an example. Let's say you thought this was short, right? Triangle up, price closes underneath. You did get your risk off, but it came back and stopped you. Now, I want to use this as an example to explain where this would have saved you a lot of money on the way we're using the new stops, okay? So let's say you just thought we were going to tank to 0, right? Like that was the A leg, and we would go down. So you decided to short. So I'm going to show you the good, the ugly, the positive, and the ugly. If we get to a situation where it reverses off of all this stuff, like see you get triangle up, price underneath. So this is an immediate stop right here. You would have ended up entering short here at 84, and this would have been your stop right here at 96. So that's 15 points worth of stop, right? More or less. If you decide, let's say you didn't think it was long, you're like, oh, I'm so bearish, it's going lower, right? So your next trade here, again, this is your entry. This is the maximum favorable excursion you could have gotten. So you would have entered 90 for 82, so 7.5 points. This would be your stop right here. So the difference is you would have entered at 90 and stopped 96.50. What does that mean? Why is that important? We want to figure out, based on the range bar we're on, what the smallest stop can possibly be, what the average stop is if it reverses within 1 bar, right? Because I want to give you an example here. This would be a stop, but if you took your 1-to-1 RR, having known it would be a 6-point stop, like your worst stop probably would have been right there at 98, right? So you end up with a 1-to-1. It really crushes the RR from the negative side of the trade, right? So I'm going to give another example of that. Again, this is not a short here, but here's the other example of this. Let's say you're still thinking short, and this can happen. It can be frustrating, right? You get, no, that's not a trade for us. The triangle's too far off. This doesn't give the star. Let's see. No, 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 no. More no. Yes, this is the long. So actually, that would have worked out perfectly, right? Triangle down. Your long is here. Your stop is here. Your scale somewhere between here and here. Like you get a scale off almost immediately for 5 or 6 points. So if you're scale off for 6 points, right? Just take your entry, the O2, subtract 6. That puts it roughly at 96. That's your 1-for-1 RR. That's why using the back of that body, right, generally keeps you at a 1-to-1 R. Keeps you at a 1-to-1 RR. You're flat on this trade if it comes back and hits behind there. Now here's where the conflict is going to get created. Is if that trade stops you and then it goes, like in that case, the trade ripped from 02 to 79. You know, why gave up a 50-point trade? Because it came back and kind of tagged me right over here on behind my bar, right? Okay, so it did. The point is, if you ran 100 trades, right, and let's say you averaged 20 points on your winning portion of the trade and down flat till very little on 80% of your trades. And then the rest of them are just these full stop bars where you took it and they gave you a full stop on it, right? But 80% of your trades, you cut your stop to break even, right? Your RR will explode to the upside, right? So I'm going to show you the same trade on ES, and I'm going to use the stars as the trade. Okay, so if I'm on ES, okay, let's say I use use star into star. Let's see if I have it here anywhere. I think we get it over here. Okay, this is an example where it would just be a stop. See how you got star into star there at 2 in the morning? That's right before London Open. I would never take that trade. But let's say you took it. Normally your entry would be right here, right? So it's a 41.50 against a 41.55, and then we usually add a point to it. So it's 41.56. Now we're changing that formula. Basically, I need the very next bar to be a triangle down. So my stop comes on the close of that bar. So you go, well, it's just a 2 points difference. Well, if every trade you knock off $100 off your stop, it's pretty big. 2 points is $100. It's a pretty big difference in the way that the trade trades, right? So I'm going to give you some other examples. There's one. Let's get back to where we actually had range. So I can use the 8 range bar for the example. And I want to do star into star. Okay, so here's an example. There's a star with a power bar. And this is star into star. So in this case, so the reason I want the star and I want the next triangle up is because now my stop, if I enter here, right? So I would enter this trade at 40. I'm going to put an arrow on it. I would enter this trade at 41.22, right? And what I'm going to say is I want my very next bar up to be a triangle. Why do I want my next bar up to be a triangle? Because now my stop immediately, so my original entry was 41.22 to 41.17, right? Plus another point, 41.16. But now, as soon as I get that triangle up, my stop goes from 41.16 to 41.19 and a quarter, right? So follow this. All of a sudden, I went from a 22 to 16, which is a 6-point stop. Again, I'm not going to trade the first few minutes. 22 to 16 stop, right? Now I went from a 22 to a 19 and a quarter stop. So it cuts it down to 3 points. So where's my first 3 points come from? If I get 22, that means I need 25. As soon as I get this bar here, I'm now break even on the trade. Now I can choose whether to move my stop up or not, but I've crushed, right? I've crushed my RR, my negative RR, and just held on to my positive RR, if that makes sense, right? I've completely crushed that negative RR and held on to it, right? So now I can go and let the trailer run, because I know worst case scenarios I'm going to end up break even or flat, right? Let me give you some other examples with other trade setups that we have, right? So if I move further to the left on ES, okay, so we knew yesterday, Friday, we were pretty certain we were to the short side, right? So I'm going to give you another example. While this isn't star, that wouldn't have been an entry for us. It was just apex into apex, star into apex. Well, we can use it anyways. This is just apex closed back in with a star, right? So it's an A grade trade. It's not A++. But let's say you took this. As soon as you enter here, your stop is wherever the range bar predictor tells you the next bar will close up, because you want the triangle down. As soon as the triangle down prints, your stop now goes pretty much back over here. Okay, so it's a small increase. And then what you're going to do is you're going to watch the range bar predictor. Let me see if I can show this in real time. See how I've got the triangle down right now, Roy? See how I got the triangle down? Well, here I'll show. Before this bar formed, see how it showed me where this bar would have closed right here, right? So let's say I took this trade. I know that bar would have closed right there. So instead of leaving my stop back over here, my stop now comes down here, and it moves my stop from 39 to 40. It cuts that stop. It takes practice in execution, but it cuts that stop by almost 4 points per contract. It's a huge cut in the deal. It just takes practice to move that around. It's the same entry. Right? But it's a different execution. So like when I get this over here, if I take this trade, triangle up. So this would be a stop. So this is where it'd be frustrating. Triangle up, price closes underneath. My original stop goes here. I get the triangle down. My stop goes here now. And see how this bar closed behind this point of control? That's my stop on the trade. I'm out on that trade. But let me explain why that would be different. So let's use that stop as an example. Okay, so it's the regular setup that you're looking for. But once I get the star, right, my entry's here, my original stop is here plus a point, right? So it's 44 to 49 plus another point, 50, 6 points, right? As soon as I get this down triangle, my stop now moves down here. So moves from 50 to 48, 2 points of savings. That's significant, right? Actually, is that right? It's more than that. 51 to 48. So you take off $150 per contract and stop just by moving your stop right there. But then there's a second step. You've got the down triangle. So you know any bar that closes behind this point of control is your stop. So in this case, right, my stop would have been right here. That's where I would have closed that trade out at 41.46. My entry was 41.44. Why is that important? Because if I scaled here, right, that's 41. My original entry was 41.44. If I take a 41.42, which 2 points is almost every time, right? That created a 1-to-1 RR scenario. Okay. Now, what's going to be frustrating about that is this trade ultimately worked and rolled down hard. We were technically correct, right? So what we have to decide upon is which side of the risk we're going to take, right? And the answer to that question is taking your orders in flows. So what this is going to mean is about 20% of your stops will be full-size stops still and will suck, right? But the other 80%, 70 to 80% of your trades will be 1-to-1 RRs on your initial trade, plus whatever your trailer gets. And I'm telling you, you can have a 50% win rate with a RR like that. And this would be a great example right here. So let's say this triangle down was our entry. It's not, but let's say it was, right? So let's say this had been a star. No supply, no demand, pink bar. Let's say you'd entered here. I'm going to go through the whole status right here at 814. My original stop would have been here plus a point. So I'm at 30 to 36.50, 6.5 points. As soon as I get this bar right here close, right, I know where it's going to close. So that's 2 points, right? So now, but my stop moves to where? Right over here, just behind that to 41.31. So now I have a 41.30 entry with a 41.31 and a quarter stop. I've already taken, that's 1 1/4 stop. I've already taken off 2 points. And so if I'm trying to get this trade to go like this, right? If I'm trying to get this trade to go like this, I have completely crushed my risk on this trade. As a matter of fact, I walk out profitable no matter what happens. So now the risk on that trade is the opportunity risk instead of the dollar risk. Does that make a little bit of sense in the room, the way I explained that, guys? Randy, Steven, Peter, Bill? Does that concept make any sense? Okay. The cost is going to be, damn, it went 20 points and I got stopped for a 1 1/4 point profit on a half size, right? But let's say you come back over here and this sets up for us, right? So now you get the same entry. Let me show you how that'll work. So I'm going to have to play pretend land so I don't have to hunt for entries. Okay. So now in pretend land, I'm going to enter right here. We're going to say that's star into star just for sake of conversation. Okay. My original stop, right? My original stop is going to be 41.33 against, well, that was a type stop, 41.33 against 41.38.50. So 5.5 points, right? As soon as I get this, my stop's going to go, let's just say it's a point behind the point of control. So 34 plus 1, 35. Okay, that's my new, this yellow line is my new stop just from a place I have to put the stop. So I've brought the stop from 41.38.50 to 41.35. That's 3.5 points. So that's $162 a contract in stop savings, right? If I scale off at 41.31, that means my cost is now 41.35 against 41.35, break even, right? Now my stop would come on any bar any price that closes behind that point of control, right? So I can see where the range bar predictor is. And now in this case, right, with a break even trade, right, with essentially you're profitable no matter your break even worst case scenario. Now on your remaining contracts, you get this rip to the downside. That's where the value comes in that setup. So what are you going to have to tolerate? You're going to have to tolerate times when it does this, like you're short over here, comes back and then it rips, and you don't get the second setup in exchange for this. But what does this allow you to do? So the frustration level will go higher because sometimes you'll have trades that get stopped for small profits or small losses. Occasionally, you're going to get a full stop, right? Occasionally, you're going to get a full stop, okay? And the majority of the time, you're going to get your scale off and hope the trailer runs, okay? Bill, does that make more sense now that I explained it that way on ES? We had this conversation last night. We didn't get to do it visually. Does that make sense? By the way, that's open drive lower, just FYI. I don't know if Bill's listening or not, or if he's in the. I know he's in the room. I don't know if he's listening, but. So for those of you who don't like to enter and exit trades a bunch, this is going to suck, right? If you don't like to go, I'm in, I'm out, I'm stopped, I'm moving the stops all around, you're going to be like, this is bullshit. I hate it, right? But it is going to crush your negative trade stops, right? Dramatically. And this is exactly where it'll suck. Let me show you. This is another example. Let's say you try to take the continuation trade right here. So you entered here. You entered here, right? Your stop was originally back here at 41.4675. So that's 6 3/4 points, right? Once you get the down triangle here, right? You got 41.38. It's almost 2 points almost every time, right? Now your stop is just going to go over here to 41.45 because I want it behind that point of control. But, so I'm looking over here, right? So what's the first thing I've done is I've backed up two things. If I take that 2-point scale, I've moved my backup from 41.40 to 41.42, right? But I still have a 42 to 45 on half size, which is net 3.5 points, right? So, but it's still a 3 points on half size. Agreed. So now, but in addition to that, right? So my stop's going to be sitting right there at 41.45, but any price that closes above the point of control of this bar is now my stop. So in reality, I end up with a 41.42 stop. I paid commissions. Your average stop is going to be 2 points on ES on an 8-range bar the majority of the time. 20% of the time, it's going to be a 6-point stop, and that's going to suck. You can pretty much bring that, once you get the triangle down, you can pretty much bring it to a 3-point stop. And now just apply your regular entries and manage the risk profile so that you're not getting crushed on your risk, if that makes any sense whatsoever. Okay, very cool, Bill. Thank you. Please, let's lock that so people can copy it. Guys, I'd write that down. If you don't understand what that means, I'll have Bill explain it later. It's very important. Okay, it's very important. And Bill, if you don't mind, once it slows down at 10:30. Side news, I will not be here this afternoon. I apologize. I have to make a run to the airport for my aunt. She's my favorite person in the whole world, and she is flying through Dallas. And she asked me to take her to lunch in between flights. And she's 83 years old, and I need to take advantage of that while I can. So God willing, I have many years left to do that, but I need to do that. So that's what we're dealing with. Does anyone have any questions over that? Is that clear? No one has any questions. So let's put our work into practice. For those of you who see me doing new stuff, right? Stick with what I told you in coaching, right? You don't have to take all the trades I'm taking. Let's see if we have any econ this morning. Nine a.m. ISM Manufacturing PMI. And that's a face ripper. And again, look where we are through this, right? Do I want to take trades in here? Nope. Target 12,951, right? Why? That area is dangerous to trade through, to short through, because it can rip, right? We haven't got, oddly enough, short setup through there. Let's see if we get the long setup. Wow, that's a short squeeze. Star, no, purple bar, star, long. Nothing over here. Purple bar, star off the 20. Purple bar, star off the 20 here and here for the long. Both of those ripped. So my suggestion is we just let the first half hour go, then we start scraping in the money. Would be my suggestion. Wednesday, we obviously have Fed, and then Friday's PMI. Non-farm payrolls. So we'll see what that brings. And if y'all will give me just about 5 minutes, I'm going to go and I'm going to go make myself a cup of coffee. That's what I'm going to do. I'll be right back. Sorry, guys. It didn't update. I apologize. There you go. All the way through. Wow. Illiquid. Heads up. I think the news was released early, is what just happened. Maybe not. Maybe I'm wrong. But that is moving really fast. Wow, the dome's just incredibly fast on NQ. Like, wow. I would not touch NQ with a 20-foot pole or ES right now. This is an illiquid market, guys. Both sides. Inside the value area on both markets from overnight can get easily slipped through. No one's defending or even trying to defend. Crazy. Up into the back of the zone. Above 12,973, watch for it to push up. Again, pretty illiquid at this point. Again, that proved very helpful in that area. If you just didn't fight it in here, look at that from that area location, how we treated it so far today. You know what I mean? Just anything outside of the open where it pushed in and rejected out. Look how that value area just got completely traded through. That's a good add to our read. Now we can trade down the other way as well. Two minutes till econ. It'll settle. Don't have to worry about it. It'll come back into us. Ten seconds till econ. Expect stupidity. There's your stupidity. I guess it'll be right back up. Again, that whole area gets easily traded through pretty easily. We're just at the beginning part of that single prints on ES. Not single prints, but value area. So we'll see. ES is definitely weaker than NQ from a point standpoint, but resistance is up here, right? So you can trade in here if you want. Clearly it rejected out of that yellow zone, right? But the potential to slip through here and through this value area is pretty easy on this. Again, it's just too freaking thin for me. So I don't have any interest in, mega thin products. As long as it keeps sweeping 100-point ranges, I don't have a desire to get clocked on that. It's just too fast for me to do anything. I literally have in my dome one contract loaded. One. So people are nervous about, is the market going to crash? Are we going to reverse? It's the last day of the month. All the selling took place. A lot of times I saw a stat that shows when the last day of the month is down that we build on that stat. Who knows? But what we want is a structured market to make money off of that's not moving 100 points in 10 seconds, right? Like that's just really difficult for me to even manage. And I'm pretty fast and I can't get it done. Hey, Sean, did you double check everything on your system to make sure you're in line properly? Okay. So for me, it's pretty easy. I'm just going to wait to get out of this 12.951 to 12.855, right? Because I can see they're not defending it. I can see it's moving like crazy. And I can see I can't make very good money in that area. I know ES can trade through here, but I don't need the totally fruity trading to make a decision, right? See what I mean? Fruity. We should eventually there's not a real reason to rally this, but they can try. Anyone disagree with my assessment so far or have a different point of view? Bill, do you have another point of view? Anybody? Anyone's like, Simon, this is the low, you're an idiot, get long, any of that? I think NQ is so blindingly fast right now. Yeah. So see where all this back and forth on ES is coming from? All inside this thing. And that goes all the way up to 41, 51, 75. So I think I can wait them out. You can just see how people are just getting crushed on these rotations. Those are fast rotations. I'm going to stop this recording for this morning.